Ekurole, and welcome to Financial Empowerment. I am your host, Ifa Bemero Fahim Ali Bey, and today we are going to discuss financial empowerment as usual, as we do every Friday. Before I commence, let me first apologize for last Friday. Last Friday, I was having a couple of technical difficulties, as a result of which I ended the program prematurely. All right. However, today we are going to look at some of the basic terms as it relates to real estate. So today is going to be the first part in a series of lessons on real estate. All right. So to begin today's program, I'm going to read an essay IFA, the very first essay IFA in Iwori Otura. This essay IFA is about disunity and its cost. A crooked stick diffuses fire. A madman scatters his own home. Ifa divination was done for Baba Ijo and his children. They said that the children of Snake would never be able to come together, so that they might offer effective resistance on the day of the battle. They said if Baba Ijo wanted them to come to agreement that they must sacrifice the herd, and they did not sacrifice. This is why snakes are scattered till today. And that was the essay IFA for today's session. All right, so now we're gonna get a little bit into some information, the basic definitions that are used in real estate. All right, a lot of the details about real estate investment, we would get into it later on. But at the moment, we are just going to introduce some of the basic terminologies that is used in real estate. And maybe on the next session, we may go, a lot further into actual real estate investment. All right, so the terms that we're going to start off with today is going to be ARM. ARM. ARM, of course, is an acronym for Adjustable Rate Mortgage. All right. There are two types of conventional loans. The first is the fixed rate, and the other one is the adjustable rate mortgage. In an adjustable rate mortgage, the interest rate can change over the course of the loan, right, at 5, 7, or 10-year intervals. For homeowners who plan to stay in their home for more than a few years, this is a risky loan, as rates can suddenly skyrocket depending on the market condition. All right. Now, I guess when you compare the adjustable rate mortgage to the fixed mortgage, you would discover that with the adjustable rate mortgage, there is no level of uncertainty or predictability as to what the interest rate might be over a period of time. Right? Whereas the fixed rate mortgage, you know exactly what you would be required to pay in terms of interest on a monthly basis. Okay? The other term on the list is the term amortization, right? This is the process of combining both interest and principal in payments rather than simply paying off the interest at the start. This allows you to build more equity in the home early on. All right. Now, apparently, the definition that they give here seem to be a very sanitized definition, right? Um, but we will talk about the same term, amortization, later on, as it applies to loans and failure to meet your timely payments on your loans. All right. The next term they have on the list is appraisal. In order to get a loan from a bank to buy a home, you first need to get the home appraised so the bank can be sure they are lending the correct amount of money. The appraiser will determine the value of the home based on an examination of the property itself, as well as the sale price of comparable homes in the area. All right, now this definition of appraisal seemed to be somewhat, insufficient. But I would elaborate a little bit on some aspects of this definition. All right, the first thing is the bank ain't gonna lend you no money unless they know what the value of the property is. So the first thing they do is they send someone in to evaluate the property to determine what is the actual value of the property. There will be several different type of terms that would be used, like for example the market value, which the last part of the definition sort of explained in a sort of a roundabout way. It says that the appraiser will determine the value of the home based on an examination of the property itself, as well as the sale price of comparable homes in the area. That is what gives the appraiser an idea as to what the market value of a property is. What they do is they compare what properties in the neighborhood is valued or what they are being sold for, to have an idea as to what is going to be the value associated to your property or to the property that you're interested in purchasing. One of the things is that whatever the value of the property is, in most instances, the bank would not give you a loan for the full amount. In most cases, it is 80% of the value of the property you would be able to acquire in terms of a loan. All right, unless some special arrangement is made. All right, which is something we would get into later on if you intend to do any type of upgrades to the property. Then in some cases you actually could approach the bank to borrow the amount that you need to do the upgrade. All right. The next term on the list is assessed value. This is how much a home is worth according to a public tax assessor, who makes the determination in order to figure out how much taxes the owner owes. So the assessed value ties in with the taxes that one has to pay. All right. These assessors normally would be government people who would actually assess the value, and they would associate a particular tax amount that one would have to pay. All right. Now, the other term on the list is what is called a buyer's agent. All right. This is the agent who represents the buyer in the home buying process. On the other side is the listing agent who represents the seller. All right. This is an important thing for you to understand if you're getting involved in real estate. If you are going to have an agent work on your behalf, you must know the exact role of that person. Okay. Now, the seller's agent here is referred to as the person on the side in the listing agent, as the listing agent who represents the seller. So the seller could have a representative, the buyer could also have a representative. But one of the things is that to prevent a conflict of interest, normally your agent is going to be doing either one or the other and not both at the same time. All right. The next term on the list is cash reserves. All right. The cash reserves is the money left over for the buyer after the down payment and the closing cost. All right. Number 7 on the list is closing. The closing refers to the meeting that takes place where the sale of the property is finalized. At the closing, buyer and seller signs the full documents and the buyer makes the down payment and pays the closing cost. All right, so basically the term closing refers to the closing of the deal when both the buyer and the seller meet and agrees. If they meet, it's a market. It's the meeting of the mind. But when you close, it means that the entire arrangement has come to a settlement where you agree. The buyer agree to the condition, the seller agree to the condition, and we sign off, and that is the end of the deal. It's called a closing. All right, now the term closing cost is mentioned. So the next thing on the list explains what is closing cost. Closing cost. In addition to the final price of a home, there are also closing costs, which will typically make up about 2 to 5% of the purchase price. I'm not certain this may apply to Trinidad, but definitely it would apply to other countries. Not including the down payment. Okay, example of closing costs include loan processing costs, title insurance, and excise tax. All right, so they're saying the closing cost doesn't include the down payment, but would include all the other associated costs. And they gave examples like the processing of the loan and the title insurance and the excise tax. All right, the next thing on the list is comparative market analysis. All right, comparative market analysis is a report on comparable homes in the area that is used to derive an accurate value for the home in question. All right, comparative market analysis generally give you a ballpark figure of what a property is valued, and this is generally based on what is actually happening with the other homes in the area as far as price and value is concerned. All right, there may be other factors like infrastructural factors, but we would get into that, when we meet the suitable definition or when we get into the actual real estate course itself. All right, number 10, contingencies. This term refers to conditions that have to be met in order for the purchase of a home to be finalized. For example, there may be contingencies that the loan must be approved or appraised, or the appraised value must be near the final sale price. All right, the next term is dual agency. Dual agency is when one agent represents both sides rather than having both a buyer's agent and a listing agent. As I mentioned earlier, you may not want to have a dual agent for reasons of conflict of interest. This individual who functions as a dual agent will be very motivated to sell a property. Now, I'm not saying that the person ethics has to always be brought into question, but you would want to know that the person you have hired to be your agent represents your interest and not necessarily both parties' interests. Okay? The next term we're going to deal with is the term equity. All right? Equity is ownership. In home ownership, equity refers to how much of your home you actually own, meaning how much of the principal you have paid off. The more equity you have, the more financial flexibility you have, as you can refinance against whatever equity you have built. Put another way, equity is the difference between the fair market value of the home and the unpaid balance of the mortgage. If you have a $200,000 home and you still owe $150,000 on it, you have $50,000 in equity. So basically what they are saying is the equity is what you have paid versus what you owe. So if you had paid 50%, your equity would be half of the total amount owed on that particular property. The next term on the list is escrow. Escrow is an account that the lender sets up that receives monthly payment from the buyer. The next term is fixed rate mortgage, which we spoke a little bit about when we dealt with the ARM mortgage. But here is a clearer definition. Fixed rate mortgage. There are two types of conventional loan: the fixed rate and the adjustable rate mortgage. In a fixed rate mortgage, the interest rate stays the same throughout the life of the loan. All right, the next term is home warranty. This warranty protects the future from future problems to things such as plumbing and heating, of course in a temperate country, which can be extremely expensive to fit. The next term is inspection. Home inspections are required once a potential buyer makes an offer. Typically, they cost a few $100s. The purpose is to check that the house's plumbing, foundation, appliances, well, in the case of Trinidad, no appliances, hardly any, and other features are up to code. Issues that may turn up during an inspection may factor in the negotiation on a final price. Failing to do an inspection may result in surprise, costly repairs down the road for the home buyer. People, if you intend to buy a home, you would want to ensure that a proper inspection is carried out by the required specialists. You do not want to discover after you've purchased a property that the property has some major defect. When they talk about codes, they are saying that in many countries, the local authorities have particular guidelines or outlines as to what would make up a functional home in terms of its structure and the solidity of the structure. All right. The next term we're going to read is interest. This is the cost of borrowing money for a home. Interest is combined with the principal to determine the monthly mortgage payment. The longer the mortgage is, the more you will pay in interest when you have finally paid off the loan. So basically they are telling you here that the interest is the amount that you pay in addition to the capital when you pay off a loan. The next term is listing. A listing is essentially a home that is for sale. The term gets its name from the fact that these homes are often listed on a website or in a publication. So whenever you hear a real estate broker talk or make reference to the listing, he is generally or she is generally talking about a list of properties that are available for sale, and it is in most instances listed by either the seller or the seller's agent. Okay? Listing agent. This is the agent who represents the seller in the home buying process. On the other side is the buyer's agent who represents the buyer. And again, I would emphasize, I warn that if you are purchasing a property, try to get an individual who represents you only. That way, you would feel comfortable and assured that the only interest the person seeking, of course, is your own. Well, yes, they're working for money, so they are in fact seeking their own interest too, but you want to be assured that this person is really diligently doing their best to get you the most suitable property that matches the capital that you have in order to make your down payment. Okay, the next term is mortgage broker. The broker is an individual or company that is responsible for taking care of all aspects of the deal between the borrower and the lender, whether that be originating the loan or placing it with a funding source such as a bank. All right, so what they're telling you is the mortgage broker basically matches you, the borrower, up with the financial institution that is providing the loan, right? In this case, for purchasing a home. Okay, the next term is offer. This is the initial price offered by a prospective buyer to the seller. A seller may accept the offer, reject it, or counter with a different offer. All right. The next term is pre-approval letter. Before buying a home, a buyer can obtain a pre-approval letter from a bank, which provides an estimate on how much the bank will lend that person. This letter will help determine what the buyer can afford. So in other words, we're saying if your intention is to enter into the market for purchasing a home, one of the things that would give you a clear idea of what value of home you can afford is a pre-approval letter that you would get from your bank, credit union, or financial institution. All right, stating what they are willing to lend you. All right. The next term on the list is principal. The principal is the amount of money borrowed to purchase a home. Paying off the principal allows a buyer to build equity in the home. Principal is combined with interest to determine the monthly mortgage payment. All right. Here is a term that you might hear quite a bit when we discussing issues concerning real estate. The abbreviation is PMI. It stands for Private Mortgage Insurance. Private mortgage insurance is an insurance premium that the buyer pays to the lender in order to protect the lender from default on a mortgage. These insurance payments typically end once the buyer builds up 20% equity in the home. Real estate agent. A real estate agent is a professional with a real estate license who work under a broker and assist both buyers and sellers in the home buying process. The next term is real estate broker. A real estate broker is a real estate agent who has passed a state broker's exam and meet a minimum number of transactions. These brokers are able to work on their own or hire their own agents. Relators. A relator is a real estate agent who specifically is a member of the National Association of Realtors. NAR has a code of standard and ethics that members must adhere to. Well, I think in Trinidad there is a Real Estate Brokers Association. They are not called the National Association of Realtors, but there is an association here for real estate persons. Okay, the next term on the list is refinancing. Refinancing is when you restructure your home loan, replacing your loan with an entirely new loan that has different rates and payment structures. The main reason people refinance their home loan is to get a lower interest rate on their mortgage and therefore lower not only their monthly payment but also the overall debt owed. All right. The next thing, I'm not sure if this applies to Trinidad, but it definitely does apply to other countries. There is something called title insurance. The title insurance is often required as part of the closing costs. It covers research into public records to ensure that the title is free and clear and ready for sale. If you purchase a home and find out later that there are liens on your home, you'll be glad you hired a title insurance company. Okay, basically the title insurance company, as far as I know, does two things, and one of them is they do the research on the property to make sure that there is no cloud, meaning that the person who is selling you the property doesn't owe anyone. So that is what they are talking about when they speak of liens, meaning that anyone else could make a claim on that property. Another important role the title company actually plays is that they are the holders of the original title for the property. All right, this is something not much discussed, but that is one of the roles that they also play. All right, so this commences the first part of the real estate training for the financial empowerment program. So what this is basically is a list of the definitions that is going to be used during the course of the real estate training. So it would be excellent if you would review this video several times so that when we actually get into the real estate training and the terms are used, you will already be familiar with them. All right. I would like now to just let you know of the platforms on which you would be able to view our streams. The financial empowerment videos can be viewed on the IFA Orisha Tradition and Discussion group. It could also be viewed on the IFA Bimero Home of IFA Orisha Tradition. It could also be viewed on the Grassroots Education and Entertainment Network. It could also be viewed on the IFA Orisha Institute of Sacred and Divine Science. It could also be viewed on the Irie Island Research Group. It could be also viewed on the IFA Orisha Community Congress, the Orisha Baptist Teaching Moments, and the IFA Orisha Trinidad News, IFA Orisha Trinidad Events of Trinidad and Tobago. All right, these are the various platforms where I would be sharing the video. All right, so with that, I would like to say Odabo. Thanks for having me, and please like and share the videos, and I would see you next time on Financial Empowerment. Odabo.